information. Watch fresh episodes of Community Forum on Sundays by 9:30 p.m. only on TVC News.
Well, thank you for staying with us. Now, Nigeria's inflation has finally slowed for the first time in 19 months, sparking hope that the series of rate hikes might be starting to show some effect. This development is likely to be welcomed by Nigerians who are enduring the worst cost of living crisis in decades. Well, according to the data from the National Bureau of Statistics, headline inflation in July stood at 33.40%, and a decrease from 34.19% recorded in June. Similarly, food inflation saw a decline, dropping to 39.53% from 40.87% in June 2024. A slowdown in inflation is set to provide some relief to citizens who have been significantly impacted by the present administration's reforms. These citizens have taken to the streets in protest earlier, calling for reduction in electricity tariffs and reinstatement of fuel subsidies. In response, government took action in July, suspending taxes and import duties on essential food items like maize, wheat for 180 days, a strategy intended to bring down food costs. Well, let's look at all of these issues and how it affects me and you. Nabila Mohammed is an investment analyst with Chapel Hill Denham. She joins me to continue this conversation. Good afternoon, and thank you so much for being on the program this afternoon.
Thank you so much, Mr. Tolu. Thank you for having me.
Well, I think we should start with that. What should we say? Fairly good news of inflation declining for the first time since like 19 months. How does that come to you? What were you expecting at Chapel Hill? Was it a much decline, or were you expecting something more? Let's know.
So, as you rightly said, the inflation print for July 2024 came in at 33.4%, and it compares favorably with our forecast. I mean, in-house, we had expected a slightly higher figure at 34.5%, but we are glad to see that we have started to see this inflation on a year-on-year basis, just like we enjoyed some form of inflation on a month-on-month basis, like for 3 months, before it's truncated in June. So we're happy with the report, with the fact that it came in at a lower rate relative to our forecast and relative to the previous month, which was month of June.
Well, looking at that, would you now also say that it seems like some of the policy measures or some of the policies instituted by government are beginning to pay off?
I mean, most definitely. What we noticed with the report, with the inflation report for the month of July, was that we did notice that prices of food items like milk, fish did reduce. The rate of increase in the month of July wasn't as compared to the previous months. And we all know that the import duty exemption on certain food items, like you rightly mentioned, millet, maize, wheat, all also impacted food inflation. And given that, as we know, our entire CPI is largely about the food index relative to the core index, any slight drop or reduction or disinflation from the food inflation will definitely impact headline inflation overall. And that was what we really saw. The exemption on import duty tax actually became effective in the month of July. So it's not surprising that that would have a positive impact in the food inflation print, and of course, consequently translates to a lower inflation, looking at it from the headline point of view.
You've talked on something very important. That's the significant decrease in some food prices. We also see governments putting in more efforts in reducing price of food stuff, no VAT and of course excise duty on some of this staple food, like I think some food stuff like wheat, sorghum, and all of that. Now, what really do you make of this move by government? Some also say it might have a negative effect if not properly managed. I don't know if you also think along that line.
I mean, we do not see it having a negative effect right now, given that the policy is not even something that they intend to have for a long period of time. it's around 180 days that started in the month of July. So they just really want to rein in inflation from that point of view, while they allow the fiscal authorities to see what they can do in terms of addressing structural issues. So it is more or less like a quick fix, and we should welcome it, given that we've started to see the positive impact that it has had in the month of July. And hopefully, we expect that it should be sustained regardless of every other issues that could feed into our inflation at the end of the day.
Petrol scarcity and its attendant effect on the larger economy is something that is biting so hard. I bought PMS a liter for 900 naira. Yes, it's happening and we are seeing things like that. So high energy prices and oil. Let's look at the impact of this before I take you to my next question. I'll just ask you both in one. CNG to the rescue. How soon is that coming up?
So let me start like this. The petrol scarcity that we are experiencing currently is largely reflective of the points that we need to really have our refineries up and running. And like you rightly said, if you are complaining that you bought a liter for 900 naira, you can imagine what those that are up north are paying per liter. We have some countries, some states rather up north paying as high as 1,000 per liter, and it's something that really should be a bother, and that is why I say it is really time for us to have our refineries up and running so that they can supply to the local market. However, we like that the government has come out to say that they are going to, we are going to see some of these refineries become very active and functional towards the end of September into the fourth quarter of 2024. Once that is in place, at least we should see some respite. Another thing, our angle that I want us to look at this petrol scarcity from is that it could have a negative impact on inflation. And how do I mean? It means that it could likely increase our cost of transport. And imagine the amount of money you start paying to transport your food items from the farm to cities would also increase. Of course, that will likely increase the prices of those items because of how much more these transporters have to pay in order to make sure that these goods are transported to where they are needed. So all these things really, should the petrol scarcity linger, would definitely have a negative impact on inflation. And we just started to see this inflation year on year. We don't want to see that truncated anytime soon. We want it to be sustained. So issues around petrol scarcity should be addressed. Now, coming to your question on CNG, yes, that is also a plus. I mean, the NNPC did mention that with the CNG introduction, we will see it's 40% cheaper than purchasing the normal PMS that we use on a daily or on a day-to-day basis. But there is something with that, which is that there's most likely going to be a time lag. I mean, given the fact that it is relatively new to Nigerians, adopting it there's going to be a time lag with adoption of that particular CNG, that's the compressed natural gas. And that is not really an immediate fix for us. So we're looking forward to those refineries really up and running and seeing them really supply PMS to the local market and, bringing down addressing all these issues around scarcity that we're seeing. It will be positive for our inflation outlook, and it will also be positive for the economy at large if we start to really enjoy what we have the natural resource for, which is crude oil.
That crude oil and oil theft is something that is eating deep into the economy. We can't even meet OPEC's quota. How are we able to supply the modular refineries and other refineries? What's your take with regards to crude theft and government effort at addressing this?
I mean, they have started to put in policies to address crude oil theft, and which is something we believe should be sustained. And if I must add, we just saw the Q2 GDP numbers, and what we noticed was that on average in Q2, relative to Q2 2023, average crude oil production rose to 1.41 million barrels per day, relative to 1.22 million barrels per day. So if the policies around addressing crude oil theft and vandalism are really put in place, and all the measures that would address that sustained through at least from through this year till next year and years to come, we'll definitely see some respite from that front. It's going to be a tall task, but we like the steps that we have taken so far.
So now that we've gotten to this, should I say, edge of the curve, there's a bit of tilting downwards. That's about inflation. Do you think we would sustain this moving forward, considering all the challenges that we face as a country? Now, what's the outlook moving forward? Have we gotten to that point where inflation will now start to taper down, or it's just for some time, then we start to go back up there?
So I would say the issue with our inflation is quite sticky. We really want things to be sustained for a long period of time before we start to believe that yes, the disinflation that we are noticing is going to be sustained. I mean, in the short term, we like that currently we are in post-harvest season, and post-harvest season supply should reduce any undue impact on food inflation and keep that in check. However, I earlier mentioned that this petrol scarcity can have a possible negative impact on core inflation in terms of transportation and how that can translate to higher food prices because they are paying more for the moving goods and services to and fro. We also have issues around just making sure that currently we know the CBN is maintaining a tight monetary policy stance. So all these things have to be in place and addressed for us to see some respite in terms of inflation. Now, when we are looking at quick fix for inflation in terms of outlook, would expect that, of course, with the import duty exemption on certain food items, that will be sustained over the next couple of months. And that's one. Second thing is that we have to see improvements in terms of FX supply to the market in order for us to see some respite and whatever impact that FX or exchange rate causes to inflation is also addressed. So those are things that we believe are quick fixes. Now, in terms of addressing structural issues around insecurity, we like the deployment of the agro rangers to all those food producing areas. And those things we believe, when they fully implemented, should eventually rein in inflation for us and start to see a sustained disinflation level going forward.
Sustain this inflation level going forward. I was able to pick that. Are there quick wins for government really at this time? Anyway, you've highlighted some. I think there are some quick wins, but maybe some in the midterm. And before I let you really go finally now, are we getting enough investments as expected? Many would say that with policies of government, it's supposed to open up the space. You're in that investment space, monitoring the window. Remittances have also improved. According to the central bank, the figures we had last week was looking pretty good. So what would you say about investments? How attractive is Nigeria despite the challenges that we face?
I would say that Nigeria is not without its structural challenges around insecurity, lack of infrastructure. But what we have seen since the start of 2024 is that the authorities have sort of put in place certain policies that are encouraging, if not FDIs, but at least FPI inflow into the country. Yes, there's always that talk around how FPIs are not sustainable. We need more FDIs. But then we need to address our exchange rate volatility, and these FPIs and other investments have improved. Now, just speaking to Q1 capital importation data, the total inflow, capital flows that we received into the country in Q1 was around 3.3 billion US dollars, and that 3.3 billion US dollars is just 500 million shy away of the entire capital flows that we got in the year 2023. We got around 3.9 billion dollars in terms of capital flows in the entire 2023. So in Q1 alone, we got very close to what we got in an entire year. You would agree with me that with that number, it shows that really there is interest in Nigeria, and there are still people that are willing to put funds in here. Of course, the high interest rate environment is also appealing to foreign investors, and we are seeing that level or that amount. On the remittance point of view, we like some of the policies that are favorable in terms of IMTOs, that's International Money Transfer Operators. We've seen series of circulars. In fact, even one that was giving approval in principle to around 14 IMTOs. So just trying to embolden and encourage IMTOs to carry on their transactions. So all these things we believe is positive, and we have seen that, of course, translates to higher inflows into the country. So how sustainable will this be? Of course, in the short term, this will provide some respite, but the long-term goal and more sustainable approach will be to address the structural issues I earlier mentioned, so that we can have more of direct investments and not the portfolio investments that could, come in and go out at any point in time. Really, the long-term goal should be to address structural problems and encourage foreign direct investment inflows into the country.
Very, very, very interesting way. But let's wrap up on this note. The next MPC meeting, what do you think will be running through the minds of those sitting around that table? Because it's going to be a very serious one. This is the first decline in inflation. Many would say they expect them to hold the rate, but I don't know what you think they will be running through the minds of the CBN governor and others around that table very, very soon, the next MPC meeting.
So at the last MPC meeting, we had 3 members out of all the members that voted for a hold. I won't be surprised if there are more members this time around that will be voting for that hold. But however, what we still see is that the CBN still wants to maintain a tight monetary policy stance. And given that the meeting will be held next month, at least they would have received August inflation print before that meeting takes place next month, and that would further shape how they intend to go about the policy rate. But in-house, we still expect at the most they might hike interest rate by 25 basis points, given the fact that they are still currently showing tight monetary policy stance. But however, if we see more members vote for a hold, we would not be surprised as well if that materializes next meeting.
I'm looking at the impact of that for the real sector. We already see manufacturers groaning and talking about the impact of this on borrowing costs and all of that. This is very important. Nabila, you agree with me?
Yes, most definitely. It is worrying. It is worrisome for the manufacturing sector with regards to accessing credit. And one thing we should look at is that this is for a short term. Once they start to see a sustained level of disinflation, we should see the rates as well also taper down.
Well, it's a good way to live it on that optimistic note. Nabila Mohammed is an investment analyst with Chapel Hill, Dedham. Thank you for starting the week with us on the show. We appreciate this. I wish you a profitable one.
Thank you for having me. You too, Tolu. Thank you so much.
All right, then. All right, let's take another break. And when we come back, let's look at markets and see what the figures are looking like. The markets is starting the week in green. We'll be right back and talk more about markets. Don't go away.
Doubt and fear doesn't occur at the canvas, it shows in the canvas. It shows the conation of raw earthen material slabbed, stroked and molded at a pace provided by the doubt and fear. Every move way in the struggle of one to the other, merging the past to the present, brushstrokes of colors seen but not known. For when the wailing stops, the pieces settle down in abject beauty erected for a century of a century. Speaking, advocating, protesting as the arts are meant to be.
Sometimes it's the story that calls. At other times, the people just want to be heard. School